Kitco News special coverage of the New Orleans Investment Conference is brought to you by Uranium Energy Corp., Uranium Royalty, Gold Mining, and Gold Royalty Corp.
Hello, this is Kitco News coming to you from the New Orleans Investment Conference, one of the most preeminent gatherings of private investors around the world, now in its 47th consecutive year. I'm Michelle Makori, and joining me now is Larry Lepard, the founder of EMA, a private investment management fund. Larry, good to have you with us.
Very nice to be with you, Michelle. Thank you for having me on.
Well, Larry, it's good to have you here, but the main topic that you are addressing, not so good.
No, that's right.
Not so positive, because you...
No, sadly it's not, yeah.
You maintain that the monetary and the political system is broken, hopelessly so.
Sadly.
And it's only a matter of time before we see the entire collapse of the system and the collapse of fiat. So
I think
break that down for us. Break down how we get to that breakdown.
Yeah, sure. I think that's generally right, and it is rather sad, but we didn't do it. We didn't, we're not the central banks, and we didn't set up the system. And it may not be a terrible collapse. It might be a reset, which we discussed earlier. But I think what's happened is we've reached kind of peak debt and peak money printing as a solution to our problems. In the early days, growing debt and printing money allowed for additional growth, and there was some inflation, but you could get by. And we've now reached that point in time at which the supply, the growth in the money supply has almost gone vertical. And there's a chart that will be posted with this interview about the M2 chart. And it just shows how, as an example, in the GFC, we printed $3 trillion plus, and it took 3 or 4 years to do it. I mean, now we printed $3 trillion plus, and we did it in 3 months. And, that's an accelerating rate of growth. And so I would suggest that because that second derivative is going up so quickly, the next one's going to cost $10 trillion and then larger and larger and larger. And this is how inflations, which could become hyperinflation, get started. And so it's terribly unfortunate. It's going to be very painful, I think, for a lot of people. That's the bad news. There is actually a silver lining here and good news, and that is the system that's broken needs to be reset. And so I think that these things will drive a reset. And I think a reset will lead to a return to sound money, and I think that will be a better system. So it's not all bad news.
All right. Well, firstly, when you say sound money,
yes,
you mentioned that is the most important contested moral issue of our lifetime. Explain what you mean by that.
I believe it is, and perhaps I'm old-fashioned, but I think that the world did extremely well on a gold standard throughout the 1800s and early 1900s. And we even had a semi-gold standard here, although it was at a national level or at the sovereign level until 1971 when Nixon broke it. And sound money allows people to plan savings and get a return on their capital. Unsound money is I think a system that allows people who run the system to benefit at the expense of others. It's called the cotillion effect. They get the money first, they borrow cheaply, and that additional money, printing money to pay for things basically is a form of diluting the money stock, and the people who get the money first are able to benefit, and everyone else suffers with higher inflation. So it is a moral issue.
So what is sound money? Is that money backed by gold? Is that the only version of sound money?
There's several forms. There's a competing form now we're going to discuss. But yes, historically, sound money has always been gold because it's the best stock-to-flow ratio asset, and it's universally recognized, and so on and so forth. And so 5,000 years of history says that the best form of sound money is and has been gold, and probably will continue to some degree to be gold. There is a competing standard, which everyone's now aware of, and that is that Bitcoin specifically, and I exclude all the other cryptocurrencies, but Bitcoin specifically, is a technological form of sound money, which is an immutable ledger, which I believe is as sound, or could be ultimately be sounder than gold. It's in the process of being adopted, which has positives and negatives associated with it, but it's come on the scene and become a real contender. And I think could end up being, the winner in a very long time frame. In the shorter time frame, I think they're both going to win. And so I've invested in both.
So you see a scenario where the monetary system collapses. Mm-hmm. There's a reset, which results in sound money backed either by gold or Bitcoin, or potentially both.
I think that's the best case. It could be messy along the way, and central banks are going to try CBDCs, and they're going to try a lot of other stuff, none of which will work. And at the end of the day, it's going to come down to what will people trust. The reason the monetary system we have works is that people trust it, and it has worked, but it's working less and less and less. And when we get to the point where inflation is just raging, which I believe we are headed there, people are going to say this monetary system does not work.
Right. Well, I mean, look, to your point, Larry, mankind has debased fiat currencies throughout the years. I mean, there was a time when even the Portuguese escudo was the leading currency in the world.
This is not something new in history, although, Keynesians would have you believe that, history doesn't matter. But, I mean, Voltaire said it, a couple hundred years ago, all fiat money eventually returns to its intrinsic value, zero.
But what triggers this? What triggers this collapse?
Yeah, I mean, I like to say this is, this collapse is, the sound money people are the guy who jumped off a building and said, I can fly. And, he's passing the lower floors right now. I mean, what triggers it is eventually the compounding gets so large that mathematically it just doesn't work. I mean, we create more and more debt, that creates more and more interest that's due. And so you have to continually print more and more. And so it's a psychological factor that once people realize, I mean, there's a law for it called Gresham's Law, named after Sir Thomas Gresham from the 1600s. Basically, it says once people realize, hey, this money I've got, it's not going to be worth as much tomorrow, they will do everything they can to spend it on either a good or something they think will be worth more tomorrow. And in my belief is that those two things are going to be gold and Bitcoin. Or, frankly, in houses. I mean, you see it right now. It's interesting to me that the U.S. housing market this last year was up 25% in 1 year, okay? Right. I mean, that was bigger than the housing bubble. I mean, the biggest gain in the housing bubble was 14%. Well, why is that? Well, people aren't stupid. They know a house has value. They can live in it. They can borrow at 3% for 30 years and buy a real asset. That's, okay, I'm going to do that. And that's why those real, so people are rejecting their cash savings and saying, you know what? I'd rather buy a house than saving cash.
So you're saying once the general consensus is that we're not buying this transitory inflation narrative, that's the trigger point when it reaches critical mass?
Exactly. That's exactly right. The survey 6 months ago said everyone believed transitory. And some people still do believe transitory. I've seen it on the web and in other places recently, people saying transitory is real. I don't think it is. I just don't think it is.
Carl Icahn is in your camp.
Right.
He recently came out to say that in the long run, the market is certainly going to hit the wall, that the crisis is looming with the way that money is being printed and the way we're going into inflation. That's Carl Icahn's word.
He's a smart guy.
Yes, he is.
He's a very smart.
He certainly has a track record proving that.
Sam Zell said it. A lot of guys see it. Yeah.
He's one of the latest to make that call. But is there anything that the Fed can do at this stage to turn this around?
I think it's checkmate. I think they're in a lot of trouble. I mean, let's review the history of it, though. I mean, Paul Volcker, and we had the same thing going on in the 70s. Gold had gone from 35 to 80, and Paul Volcker took the interest rates to 20%. Okay? I mean, in theory, the way you do it is you create very large positive real interest rates, where the rate of interest on your savings is higher than the inflation rate, and you can kill inflation. The question is there the political will and the political constellation to allow that to happen? I mean, can you imagine what 20% interest rates would do to the world? I mean, most of the world.
It would be great for my savings.
Yeah, well, it would be great for your savings, it would be great for my savings, it would be great for retirees who have saved up capital, which has been getting a 0% interest rate. But it would be terrible. I mean, most of the world would croak. I mean, we would have a depression of, to beat the 30s, I think. And so I think the political will to return the money to a sounder basis is lacking. Now, maybe they're going to find it. I mean, the one thing I do say is if the government were suddenly to say, we're going to get out of all these overseas bases, we're going to cut defense spending, we're going to means test Social Security, we're going to means test Medicare, we're going to cut back on welfare, we're going to get responsible. If the U.S. government were to say that, that would not be positive for the sound money camp, of which I'm a big part of. But, I ask everybody listening to this, what are the odds the government's going to do that as it's currently constituted? I mean, we've got Stephanie Kelton advising Biden to print more money.
And one of the premises of MMT will hinge on the fact that the U.S. is the global reserve currency.
Exactly.
Do you see other nations starting to lose faith in the U.S. dollar?
Oh, yeah, absolutely. I mean, you see it everywhere. So, Russia sold all the treasury bonds. The Chinese treasury bond, I read it this morning, the Chinese T-bond level is as low, it hasn't been this low since 2010. They haven't been buying anything new. They've been letting the old ones run off. China and Russia have both started immediately. I mean, Russia takes dollars for some of the oil they sell. They immediately convert it into gold. Okay. China has started to price oil in yuan. They've got the Saudis taking yuan. I mean, part of what made the dollar so powerful was the petrodollar and the fact that we provided the Saudi security in exchange for them taking only dollars. Right. But that's going away. The Russians have agreed and the Chinese have agreed to help the Saudis with their security issues. So yeah, there are signs. Look, the U.S. empire, sadly, the U.S. empire is leaking. It's like a leaky boat. Now, how quick is it going to sink? I don't know. I mean, but it's not. It doesn't look great.
Now, as you say, the red flags are being waved all over the place.
Oh yeah.
The alarm bells are being
Yes.
sounded. So you think we're at the point of no return then?
I really do. Sadly, I think we are. But
What do we do about it then, Larry? For people listening to you,
from an investment point of view?
From an investment perspective,
Happy to answer that.
What can an individual do to protect his or her portfolio?
Well, first off, let's talk first principles. Bonds are the worst investment in the world right now by a huge measure because they're going to lose their purchasing power. So it's a very easy call to get rid of all your bonds, in my opinion. Okay. From there, I think you start thinking about what are sound money alternatives. Obviously, some people have chosen housing. It's not crazy. I mean, houses will retain their value. You can live in them. I then go to gold and silver coins. I specialize in picking gold and silver mining stocks and have done okay with that. And then I think Bitcoin is an emerging form of sound money that's very important as well. And millennials love it. And I like it too. I'm a very big Bitcoin fan. But I think, you need to move some of your assets into something that provides you with inflation protection. That's, I think, the most important thing.
You're one of the unusual people at a conference like that advocates for both gold and Bitcoin.
Yeah.
How would you allocate that in your portfolio?
So I think this really depends on everybody's point of view, where they are on the risk curve, okay? I mean, gold is sound, fabulous, 5,000-year-old money. And gold, I don't think it's ever in a year gone down much more than 20 or 30%. So it's, it's the base, okay? It's the absolute base. It's not going away. 6 billion people know that it's money, okay? And I love gold. I've always loved gold and always will. Having said that, this Bitcoin thing has come along and, it's in some respects, it's got advantages over gold. Not in every respect, but in some it has advantages over gold. And as a result of that, and it's also got an adoption curve going on where it's being picked up and used more heavily, and that's forcing its price to go up. So, I think to everybody, it's a personal decision. I mean, the only thing I would advise, I think anybody who's 100% Bitcoin is crazy, and I think anybody who's 100% gold is crazy. So let's say, the two boundaries are 90-10, 90-10, right. Then you decide. To me, gold is like what a bond used to be. It's safe, it's boring, it's not going to go up as fast as Bitcoin, but it's not going to have an 85% drawdown. I mean, one of the things that bothers me about some of the Bitcoin people who advocate it is I'm not sure the people they're trying to sell it to understand how volatile it is. And I mean, I have people that I know who in 2017 bought it at $17,000. Fine, they'd be okay today, right. But it went down to $3,500. And of course, they probably thought, well, hey, this is stupid. And they blew it out, which of course is the wrong thing to do. But my point is, not everybody can handle that volatility. And so I think everybody has to pick where they want to be on the curve, right, of risk versus reward.
But you advocate for having both gold and Bitcoin
Absolutely.
in your portfolio.
Absolutely.
No need to choose, and a buy and hold strategy for
Absolutely, both.
All right. Well, there has been a big watershed moment in
Yes.
the world of Bitcoin. Yes.
Yeah,
the
today.
first Bitcoin ETF.
This is huge. Yeah.
The purchase Bitcoin ETF launching. It's one of several that are expected to get SEC regulatory approval.
Yes.
What does this mean for the price of Bitcoin?
I think it's a big positive, and I think at a number of different levels, and I know we're going to talk about manipulation here in a moment, but I think on balance it's a huge positive, because I know one of the fears that a lot of gold people have had about Bitcoin is, hey, the government's going to regulate, eliminate, tax, come after this stuff, and they just approved an ETF. I mean, that's kind of a vote of we accept it as an investment, right?
So the Bitcoin ETF, in your mind, now eliminates the existential crisis that Bitcoin could be outlawed?
Not entirely, but it surely reduces it. And you're seeing just more and more. I mean, we've got Senator Loomis who's supporting it. We're seeing more and more people. Gary Gensler, who's the head of the SEC, he taught a Bitcoin class at MIT. He says, look, he's a Bitcoiner. He just says, I want to make sure that we regulate it so that it's fair. And I mean, that's good. If regulation arguably will be a positive for Bitcoin, because institutions will be able to go, hey, this is regulated, we get it. Now we can do it. I mean, They couldn't do it before. So yes, I mean, the existential total Bitcoin goes away threat, I think that's very much reduced as a result of the ETF.
Okay, well, one of the other potential issues with the ETF, as we touched on a little bit earlier, is the idea of manipulation, that
Yes.
Now you have paper Bitcoin out there,
Right.
much
And
like you have paper silver and paper gold.
As we all know, paper silver and paper gold have totally suppressed their price. It's a great question.
So does this now make it easier for people to suppress the core asset, being Bitcoin here?
Yes.
And does it make the Bitcoin market more susceptible to big player manipulation?
It's a great question. I don't worry too much about big player manipulation, but I tell you, and the answer to your first question I will offer in two parts. One, it's going to be hard for somebody other than a sovereign government with an unlimited balance sheet and an offshore bank account that doesn't care about profits and losses to manipulate Bitcoin. And the reason is you can see where it all is and it's on a chain. And think about this. Bitcoin went up 500% in 6 months last year, okay? If you're naked shorting Bitcoin and you go up 500%, you're gonna get wrecked. I mean, you can't hang out of that position. I mean, they can naked short gold knowing that gold's not gonna go up that fast, that quickly, and they can wait for it to come in and buy back, okay? So I think the volatility of Bitcoin actually somewhat protects it from being manipulated by the paper players, unless the paper player is a sovereign government who is willing to print money in unlimited amounts in an offshore, off-balance sheet account. And I think some of that might have been going on in gold, and could it go on in Bitcoin? I don't know. Everybody has to think about that issue. So to me, it's not a black and white on this issue.
So the Bitcoin ETF, a negative in the sense that it could make Bitcoins more susceptible
Possibly.
to manipulation.
Possibly.
But a positive, to recap, because you think it takes away or at least drastically reduces the
Yes.
threat
Absolutely.
of Bitcoin being outlawed and the existential crisis.
I completely
But
agree.
back to one of your original points of this great reset of the Fed having no other way, do you see central banks then perhaps not trying that as they scramble when, as we talked about before, this big realization happens that inflation is not transitory and the collapse begins? Could Bitcoin then be a victim of government central bank desperation?
Yeah, I'm not quite sure I follow where you're going with that. I mean, I think
If it all falls apart and
Yeah.
the Fed has no alternative, despite the fact that
they'd approve
Bitcoin
it. Yeah, they might go and
has-
outlaw it.
Yes.
I think it's possible. I think it's very possible. I mean, look, they tried to confiscate gold in the 34.
Exactly.
You know, now, having said that, having read the history of that period carefully, only about 25% of it, people turned it in. And it's interesting. I mean, as you learn more and more about Bitcoin, and you learn a lot about Bitcoiners, as I've done, you know, you realize that with 12 words, you know, you can replicate your private key, and the government can say, hey, turn this in, or the government can say, hey, report this. But, you know, absent torturing you, you don't necessarily have to give up the 12 words, and maybe you go to some other place where they're not outlawing it. So it's pretty attack-proof. I mean, it's pretty attack-proof. So I don't worry too much about that. What I do worry about, I mean, what I worry about is this transition period. I mean, we talked about this earlier too. It would really be nice if we had an enlightened government that would realize this problem was coming, educate the populace on it, and do a controlled and organized reset in a fair way. Wouldn't that be nice?
That would be lovely.
Because but unfortunately, because of the way governments work, you know that won't happen. They'll respond to a crisis.
Okay.
And the crisis it could be pretty messy, right? We could have real hyperinflation, and that would be a mess.
So as an investor, you've got $1,800 gold,
Right.
plus or minus,
Yep.
and plus or minus $60,000 Bitcoin.
Yep.
Where do you put your money right now?
Right now, well, I mean,
Split it evenly.
I balance them. Yeah, I mean, it's
Okay.
my fund balances them. I personally balance them. I mean, they're ratios. It's all a function of how much risk you want to take. I've run a gold fund. We are into Bitcoin in a meaningful way, but we still are majority gold. Personally, I'm a little more aggressive, so I have more Bitcoin than I have gold. It depends. Like I said earlier, it's where are you on the risk curve, right?
So what is your 12-month outlook for
Yeah.
both gold and Bitcoin?
Don't hold me to this because I'm sure to be wrong, as you know. I mean, projection, you know, making outlooks. But look, gold should be $10,000 right now. If you go back and you look at the old monetary, you know, ratios and so forth, gold should easily be $10,000 right now. If you look at Bitcoin, I mean, in my view, Bitcoin could easily be $150,000, $200,000 right now. Let's go to the numbers that we talked about before, because I think it's very meaningful for people to think this through. There's $450 trillion of fiat asset in the world. Okay, not real estate. We're talking bonds, stocks, cash. Okay, 450 trillion. There's about 7 trillion of tradable gold. And there's more gold than that total, but you know, the antiquities and the central bank stuff's not tradable. And the jewelry I'm considering in India is not tradable. Tradable gold stocks, and Bitcoin is a total of about 7 trillion. Okay, 450 of total financial stuff, 7 of it in this gold area, right? In 1980, when gold went to 800, gold was 7% of the 450. So that'd be 32 trillion, okay? So 7 has got to go to 32, okay? So it's almost a 5-bagger, right? On the sound money, and that's if we only go to 1980, and I think we might go beyond 1980. Right. So the point I guess I'm trying to make is how that breaks out between gold and Bitcoin, I don't know. I mean, Bitcoin could win, gold could win, it's unclear. I mean, I'm not smart enough to know. But I do know that they both represent a form of sound money, and I do believe they both will win to some degree, right?
So I'm going to put you on the spot and ask for gold in a year's time.
I think this next run will take us to $2,700 on gold in a year, within a year.
Gold in 5 years' time.
I think within 5 years' time it'll be 5,000 minimum, potentially 10,000, potentially infinity. I think this crisis will erupt within 6 or 7 years. I think 6 or 7 years.
Okay, so I'll make it easy for you. Gold in 10 years' time.
Infinite in dollar terms. We won't measure things in dollars. There'll be some new dollar or some new currency. Which
we'll measure gold in Bitcoin?
Maybe, possibly. I mean, there'll be, the existing dollar will be dead in 10 years' time, in my opinion.
The existing dollar will be
dead
it'll
be completely worthless.
In a decade's time.
In a decade's time. It'll be just like the Weimar, it'll be we won't have wheelbarrows because we're not printing it. It's just digits. So it's
and
easy
it won't be replaced by another
fiat
currency.
No. There may be another fiat they try after that. It may be, they'll probably try some silly stuff that'll fail too. I mean, because what will happen is eventually, once you've lost people's trust on the currency, people aren't stupid, and that's why they're buying these houses now, right? People are going to say, hey, why should I take this paper? I mean, what backs it up? I mean, in the Bitcoin case, it's backed up by a limited size ledger. Okay, right. Immutable ledger. In the gold case, it's backed up by the fact that the supply only grows at 1.7% a year, right? So when it fails, it fails. That's it. It's game over.
So a decade till the end of the dollar as we know it.
Within a decade, this monetary system will have failed, in my opinion. This is just an opinion. It's a guesstimate. I could be dead ass wrong. I've been wrong a lot. Okay.
Well, at least you admit it.
But
there are a lot of reasons to see why you could be right.
Wrong, I've been wrong a lot, but I do think it's a scenario that needs to be considered.
Yeah.
And I think a lot of investors are sitting there saying, "Hey, we've had 40 years of deflation. We're going to go back to deflation." Not so fast. I mean, in my opinion, we've really turned a corner.
So people are sort of looking at the past as an indication, but only at the sort of 40 years plus.
40 years is a long time.
Yeah.
I get it. I totally get it. I'm old enough to remember the 70s when it was very, very inflationary. And I'm also aware that everything's a cycle. Everything's a cycle. I mean, commodities are dirt cheap right now, and financial assets are extremely expensive right now. That's got to reverse,
Let's get your outlook on Bitcoin then. 12-month outlook on Bitcoin.
12 months, Bitcoin will be north of 150 for sure.
For sure. All right.
And I feel strongly about that. And then 5 years on Bitcoin, somewhere between 500,000 and 2 million. It'll be very, Bitcoin is hitting that inflection point in the curve. Malcolm Gladwell's inflection point, tipping point. Bitcoin adoption appears to be about 10%. And you look at all these other innovations, and there's a chart. You look at all these other innovations and how they get adopted, and kind of when they hit that 10% level, they tend to accelerate. Cell phones, the internet, whatever it might be. And Bitcoin reminds me a lot of the internet. And so when you hit that tipping point, things tend to get going quicker. And I think that's a lot of what's driving Bitcoin. It's just the acceptance of it.
Do you see the adoption curve for Bitcoin necessarily taking away from institutional interest in gold?
Absolutely. There's no doubt. But they can both win, and they will both win. I mean, there's look, Bitcoin competes with gold. And, I see it, I admit it, it's obvious, but they're different. They each play a slightly different role. I mean, it's,
And to be clear, you regard Bitcoin as unique and differentiate that from other cryptocurrencies.
Very much so. I'm very negative on other cryptocurrencies. I mean, I think there will be some very important cryptocurrencies developed. I think Ethereum, as an example, is going to be a great layer 3. I think there are other projects that are being done that will change the world. They're very important, but when it comes to the store of value network effect, right. Bitcoin's like far and away, it's the only game. So to me, Bitcoin really is digital gold. And there's a place in the world for digital gold, but you know what? There's a place in the world for physical gold too. And so they will coexist. And there'll be some ratio, and maybe over time, Bitcoin will be, the bigger part of that ratio. But for now, we're still in the early days. I mean, we've got 450 trillion looking at 7, right? They're both going to go up, okay? So gold people should not despair. Gold's going to go up a lot. Bitcoin's going to go up a lot too. They're both going to go up because it's the people who should despair are the people who own bonds, right? Or even arguably stocks. I mean, I think stocks will get hurt too.
So room for both physical and digital gold.
Yep.
Both are set to soar.
Absolutely.
Thank you
they
so
both
much.
work. Thank you.
Thank you, Larry. I really appreciate it.
I enjoyed
Larry
being with
Lepard,
you.
thanks for joining us.
Thanks, Michelle. That was great. Very good interview. Appreciate it.
And thank you for watching. Keep it right here on Kitco News. I'm Michelle Makori.
Kitco News special coverage of the New Orleans Investment Conference is brought to you by Uranium Energy Corp., Uranium Royalty, Gold Mining and Gold Royalty Corp.,